Hey guys, what's up? Pitmeister here. Checking in. As you can see, we had some losses. We got taken out of our positions overnight, and I wanted to just demonstrate something that I actually talked about in my last video. Remember how I said it's important to, when you're doing those stop losses, to put them up a little bit above. Well, if you see right here, we got taken out right here. And it's my fault. I didn't even see yesterday when I was doing this. I set my stop loss above this bar high right here. I didn't expect it to, make such a dramatic pullback, but I didn't even see this resistance over here. Had I seen that, I would have set my stop probably about right here, and obviously we'd still be in this trade, because remember I said, I see it happen all the time where overnight these things, they come up right to the resistance and then they just go back down, which is exactly what this thing is doing. You remember we got in right here, and our target was right here. But had I seen, I didn't even see that last night when I was trading, or when I was putting these trades on. So unfortunately, I put my stop loss at the bar high, a little bit above it, not at the resistance where I normally should have, and we got taken out of that. Same thing, the Frank is a little bit different. That one, again, my system, it barely generated a signal. I mean, just barely. So I took it anyway. Normally when I first started trading this system, I really wouldn't have done this. I wouldn't have taken this one, and I think I might do that again. Whenever these signals are very, very weak, like this one. I mean, even this one's weak, but the Frank one is, was way weak. I mean, that one is just barely, barely met the criteria. I usually like to see stronger closes in order to do it, kind of like this one. Nice strong close, or even this one, nice strong close. Um, but sometimes they don't work. So this one, it's. But so that's what happened there. We're still in the pound, because you can see again, and it just demonstrates my point. Is, see, here's that first resistance. Got a little bit above it, and we are still in this position. So you can see it came up. It was came up what? Only 20 pips away from our stop loss. So we're still in this one. We're at a $5 loss right now, but there is some news coming out for the U.S. here in what, an hour and about an hour and a half, at 7 o'clock my time, existing home sales. So hopefully, if that news is good for us, the currency pair should move down. But this is a nice strong close down. See, that's what I like right there. These little tiny ones. See, nice strong move up, strong move up. It's just, they just work out better that way. Strong move up. Obviously, this one didn't work, but this one did. So, like I said, the majority of the time they do work. Sometimes they don't. Here's one right here. But I don't know if it would have worked if we would have got profits. Probably, yeah, because here's our first. We would have set our stop a little bit below resistance, and we would have hit that, and then our stop would have been down here, which is huge, but it is what it is. So I just wanted to give that update, and I will check back in later, and we'll see what happens. But yeah, we did have some big losses here, and that's kind of the thing. My rule is, whenever I'm trading more than three, and again, this is why testing systems is important. You see what works and you see what doesn't work. But I think when I'm trading three or more pairs at the same time, I'm going to reduce my risk to 20% instead of 30. I'm sorry, 2% instead of 3%. because if I take a loss on all three of these, that's about 90 bucks, versus 20% would have only been, like 60 bucks. So when you have a small account size, that's what I think would be the best thing to do. So just wanted to give you guys an update. I will update it again when I figure out what happens with the pound. But as you can see, as of right now, we are still in this thing. So, all right, thanks. Okay, guys, we're back here, and the trade is negative pretty heavily. We're 63 pips in the red right now. The dollar came out. I was really hoping that the dollar would come out with some good news, but home sales were a lot lower than what was forecast, so that didn't help our position much. It looked like at first, when the news came out at 7, all the way up until about 7:30, 7:45, the market really didn't react to it, and the pound was going down. It was actually coming close to where we got in. But then all of a sudden, the pound, the euro, and the franc, they all rose. So I guess it just took a little bit of time for the market to digest it, to decide where it wants to go. One thing that somebody asked me is, why is my pip count so high as far as my stop loss? I think I'm like 70 or 80 pips in the for a stop loss. So you can see right there, I still have a ways to go before it gets hit. I decide you can either do this system one of two ways. Again, I always try to do the 3% of the account size. So now in this case, the next trades I put on, the lot sizes will have to be lower, to make up for these losses. I'm not going to do 3% of 1,000. Now it's going to be 3% of, whatever my balance is after this trade, or whenever the trades start. And I always do it. I always do the lot size based on equity, not, or I'm sorry, balance, not equity, because, if I have money right now, like, I'm sorry, I do it based on equity, because even though my balance is 954, well, I have a trade going, and I'm actually at 938. So if I was to put a trade on right now, it would be 3% of this number, not this one, because I don't have this not much money. This is what I have. So that's why I do it. But you can do this based on, you can either do it one of two ways. You can either do, the stop loss or the risk based on pip size or on money. And what I mean by that is, so let's just say that yesterday, before I put these trades on, that instead of doing the lot sizes by risk, I just did it by pips. So I was at 1,000. We'll just say I was at 1,020, but we'll just say I was at 1,000. So that means I wasn't willing to risk more than $30 on this trade. So what I could have done is I could have just set a stop loss for 30 pips in the red, and if it hit that, boom. And then my target obviously was down here, which definitely would have given me the risk reward was actually better. It was about 2 to 1 there, so that, or well, 1 to 2 risk reward. But again, when you're trading off daily charts, the problem is, in this case, I don't think 30 pips. Obviously my stop didn't work now, but to use another example, this trade that we got in the other day, this Australian dollar. So my stop loss again was $30. I told you that it was going to go into the red, so we would have got stopped out right here. The daily charts, you got to give these things room to run, so what I could do maybe is, do instead of $30, like 45 pips, and then just divide that, maybe not setting these up so high where my reward is a lot less than it would have been, had I had a bigger lot size. But I think when you're trading on hourly time frame or a 4-hour chart, that might be okay to use. But again, with these daily charts, you know, when signals are generated, a lot of times they reverse. Here's another one. You know, I would have got in here. Let's just see if my risk was 30 bucks. You know, I'd be really close to getting taken out. I wouldn't have, but again, you know, you didn't know that. So I just don't think 30 pips is enough to let it go. That I like to do trouble zones, you know, because as you can see, the trouble zones work really well. Here's one that, you know, I would have gotten in. Again, if I would have had a 30 pip stop loss, I'm taking out, boom, right here. What I would have done if I was entering this one is I would have probably put my stop somewhere up here, because I would have seen this as resistance, and obviously I would not have gotten stopped out, and then boom, I would have profited. So I think overall, you know, when I'm using this strategy, I like to define lot size as risk, you know, not just by dollars, if that makes sense. Just because, again, I don't think, you know, that's a smart way to do it when you're trading off of dailies. You know, on hourlies, sure. I mean, you know, yes, markets do move 30 pips in an hour, but you know, it's a lot rarer for that to happen than it would be for, you know, for these daily charts. So I'm just trying to find another example where I could show you where, you know, you put your stop in, and okay, here's one right here maybe. So again, $30 would have been my target, or my stop loss, and I would have easily gotten taken out of this. Now this big candle, anyway, I think I'm gonna go ahead and stop this video now. My computer, you know, I don't like to leave it running all day, so I will update once this thing comes out.